Hello, good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwal, and Cheryl D'Souza will be joining in as well. Obviously it's earnings season, and Mahindra Lifespace has reported that Q3 numbers, strong set of numbers coming in from the company. But to understand more about the numbers, we are joined by Mr. Arvind Subramanian, the MD and CEO at Mahindra Lifespace Developers, to talk more about the numbers and their outlook ahead as well. Thank you so much, sir, for joining in with us this morning on ET Now. And I want to start by talking in terms of in the last 7 years. The pre-sale has averaged around rupees 700 to 800 crores. But this time around, you have managed to actually achieve the pre-sales of rupees 1,452 crores in the first 9 months itself. So what is the pre-sale that you are targeting this time around? Will it be a record year in terms of pre-sales then?
So we've been on a steady growth path for our residential business. As we had laid out a couple of years back, the first milestone we target to get to is 2,500 crores of annual pre-sales by 2025. And I think we are well on course to get there. If we look at the trajectory over the last couple of years, we've gone from an average of about 700 crores a year to 1,000 crores last year, and roughly 1,450 crores in the first 9 months of this year. So all indications are, we will get to the 2,500 crore first milestone that we had laid out within that time frame of 2025.
Right. Then also, what in terms of, you've given a vision to grow at over 3 times by 2025, which is quite an aggressive target. Then what are the factors that, will be driving this confidence, or what do you think is going to be driving this for your company?
So I think it's while the growth looks like a threefold growth, candidly, we're growing from a relatively small base, and coming from the pedigree we come from, with the kind of trust that the Mahindra brand engenders with residential customers. I don't see us being constrained by anything other than our own capability to execute. So at least to get to that 2,500 crores first milestone, what we've been focused on is building up the organizational capacity, the pipeline of land, in order to execute against that and deliver that target. I don't see any external constraint to getting there.
So while homeowners do appreciate their property prices going up, new buyers now are faced by the higher property prices and higher mortgage rates now. How are the sales shaping up in the light of the rising mortgage rates across various ticket sizes then?
So, look, while mortgage rates have gone up and inflation has eaten into some of their savings, we're also coming off a period of 2.5 years when there was very low discretionary spend happening. So customers have ended up with larger savings and are able to compensate for the mortgage rate increases by putting down slightly larger down payments so that their EMIs get managed. So we are seeing, particularly in the mid-market, which is our sweet spot in terms of our residential portfolio, we are seeing demand continuing to be very strong. At the lower end of the market, let's say ticket sizes below about 30 to 35 lakhs, we are starting to see some slowdown in demand. But again, their strong brands will continue to garner the right interest from customers.
So when we see in the past few years, the demand and supply for affordable housing has seen a dip coming in. Now with the PM Awas Yojana outlay being increased by over 66% to 79,000 crore rupees, do you see more developers move towards this affordable housing? Would you be looking at catering more to this space then?
We've been very keen on affordable housing for some time now. In fact, we have a separate brand called Mahindra Happiness that serves this market. We think, how we think about product and the industrialization of our supply chain will all play into serving this segment profitably. However, the last 2 years, we've seen very significant input cost inflation. And that has put a spoke in the wheel or a brake on that journey of scaling up our affordable housing business. So we have to watch very closely how commodity prices perform, because in the affordable housing business, the headroom you have, particularly if you sell a lot of the inventory upfront and are then exposed to cost inflation, that headroom is not as large. So it's important to be able to watch that very closely and take the right decisions. We are very hopeful that we are getting into a period where commodity costs are flattening out, while they're still at elevated levels compared to what they were 2 years back. At least there's predictability, and when there's predictability, you can price it into the product. So we do think in the next 6 to 9 months, the affordable housing business will once again get onto a growth path.
Okay. Now, while it has been a good year in terms of the pre-sales, the company has reported an EBITDA loss for the fifth consecutive quarter. What are the factors for the same, and when do you expect the EBITDA to turn positive again?
Look, in our business, the reported financials, the revenue, EBITDA, profit, is largely driven by project completions. And in the residential business, we've had very few project completions of any magnitude over the last several quarters. And that is what is depressing or kind of resulting in a P&L which is not looking very great. But if one were to look at the lead indicators of the pre-sales that we talked about, the collections, which have been extremely robust, I think, and the price trends that we spoke about, as these projects that have been launched over the last 2 years come up for completion and revenue recognition, you will see a very different picture emerge in the P&L.
Just talking about that, what are some of the new launches that are lined up for the company in 2023? Could you give us some highlights on the sales potentials from these launches then specifically?
Yeah, so in the last quarter, we launched 4 different projects, actually 2 projects and 2 new phases of existing projects. And interestingly, these were spread across 4 different cities. So we launched Mahindra Citadel in Pune. This was a land parcel we acquired in April, and we were able to launch it within 7 months of acquiring the land parcel. We launched Mahindra Happinest Kalyan 2 in Kalyan in Mumbai. We launched the second phase of Mahindra Eden. The first phase was launched in May. It did extremely well. We sold almost 90% of the inventory that was launched, which encouraged us to bring forward the second phase. And the second phase has also done extremely well. Incidentally, prices have gone up by as much as 14% from the first phase to the second phase within 5 months of the launch. And the last project, the fourth project we launched, was the second phase of Mahindra Happinest in World City, Chennai. That again has done very well. Also, the second phase there too has been launched at a significantly higher price, almost 20% higher price than the first phase. Going forward into Q4, we are seeing fewer launches. We are now preparing for the big launches, which will actually come in H1 of the next financial year. So in Q4 of this financial year, we will launch the second phase of Mahindra Nostalgia in Pune, as well as a small plotted development in Chennai.
Okay, thank you so much, sir, for joining us, giving us your valuable insights on what should we be expecting from the company going forward as well. As of now, Mahindra Lifespace is trading with a gain of around 1.5% in trade. But let's look at what the markets are doing, right? Nifty flip-flopping between the red and the green seems like it. Yes, off the day's highest point also. But keep an eye out on that one. Sensex up almost 0.4% in trade. Let's bring on board our guests for today. We have Kunal Bothra as well as Ashish Maheshwari joining in with us as well. And Kunal, firstly, I'm going to come to you. Firstly, good morning to both of you all. And Kunal, how are you? How should one be reading the markets? What should one be doing? Where mid-cap, small-cap space still under pressure today as well. So what is your view on the markets? Where are you looking and what are you looking at then?
Good morning, Vinny. Good morning, Ashish and everyone. So my belief is that, over the last 4 to 5 days, we've seen intraday volatility on the indices. There has not been any significant or incremental damage to the index in terms of levels. So, we look at the last 5-6 trading sessions, 17,400 has been broadly held by the Nifty, and just around that 40,000 mark for the Bank Nifty has been acting as an ample or a strong support for the banking index. Now, when you look at in that context, either the index is not falling, but the market breadth is a bit more wobbly. That generally gives an indication that possibly the markets are going into a last leg of a capitulation kind of a sell-off. Yes, majority of the reasons for the sell-off is more on the sentiment based, which with what's happening to the Adani group of stocks. But I believe once that gets settled out, the markets should get into a recovery phase. The other reason why I would be bullish on or rather not be bearish on the markets is because the global factors, look at how the global markets have shaped up, the Dow, the Nasdaq, the European markets, the Asian markets, they're looking quite strong. So we are into a setup where the global news flow as well as the global environment is quite positive, and it's just that the sentimental damage towards a certain set of stocks is impacting our markets. Once that settles out, I believe that we should be in for a decent recovery. So a buy on dips is what I would recommend, specifically holding that support of 17,400 on the Nifty.
Okay, that's the view coming in from Kunal on the markets. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more earnings updates, stocks update after this break. Welcome back, and you're watching Buy Now Sell Now on ET Now. We're going to keep it going a bit with the earnings. Fino Payments Bank 2 reported its numbers, and overall they're seeing a growth of in terms of profits, 35% growth coming in for the December quarter. Profits stood at 19.1 crores, while in terms of the revenues of the company, also on a year-on-year basis, they're seeing around 17% growth in terms for the company. Let's bring on board Rishi Gupta, the MD and CEO at Fino Payments Bank, to talk more about the numbers. Very good morning, Rishi, and thank you so much for joining in with us on ET Now. And I'm going to start by talking with about what constituents are there in that other income, and intent is to actually try to understand the sustainability of this, since it contributes over 90% of your total income as of now. So how is it actually that you're reading this number? Could you give us an understanding on that?
Actually, other income is our core income, so to say, but the way the format is that you have to show interest income separately and other income, other businesses income separately. So other income basically constitutes our core business, whether it is on micro ATM, Aadhaar payment systems, or your account opening or CMS. And that's where the constituents are. And that's where we have seen a healthy growth on each of our constituents. If I look at our CASA numbers only, which is one of the parameters of other income, we have seen a substantial growth on CASA. We have 67 lakh accounts now. We on 9 months, we have seen a growth of nearly 58% on that. Our renewal income has gone up by 138%. The other constituent is the CMS, which we do for multiple agencies, banks, NBFCs, e-commerce, logistics companies. In 9 months, we did nearly 33,000 crores of CMS business compared to 24,000 crores last year. And we have roughly 172 clients. So from a sustainability point of view, which is the second part of the question, I think if you see the Fino performance, we have been profitable for the last 12 quarters or so. And every quarter you would see that the numbers are becoming better. Vis-a-vis last quarter, as we mentioned, 36% growth is there on the profitability side. If I look at the EBITDA margins also, we have substantially grown our EBITDA margins to 12.4%, which is 32% growth on a 3-month YOY basis. So substantial growth is coming on the bottom line. There's a healthy growth coming on the top line, which makes the model sustainable. As you would see, India has a very large population, around 700 to 800 million people who need good banking services. They're largely underbanked people. And we at Fino are working to provide services to the hinterlands, to rural, to even the semi-urban and urban geographies. The market opportunity is quite big. We have been able to crack the model by building up both the top line and a healthy bottom line as well.
Rishi, I want to know one more thing. I'm just going to ask you a bit more on these other components that and constituents that you've spoken about. Could you help us in terms of any guidance, or how are you seeing the growth going forward in FY24, FY25 for these constituents then?
So some of our products like CASA, we have seen substantial growth, as I mentioned earlier, and CMS also we have seen substantial growth. We believe that both the products, which is our ownership products, now constitutes about 25% of our overall top line. We believe that those two products, which have a high margin as well. So the strategy of the company is to build up on the high margin products and also to diversify by bringing in new products into the business. So we believe these two products will continue to grow. Our other products, which is remittances, which constitutes around 35% of the total income, we believe it will go at a good decent number, may not see such high growth which is there. Our cash withdrawal products, both APS and micro ATM, have seen a reasonable growth in the last 1 or 2 years. We believe the growth will be more or less in the same range as we go forward in the next couple of years. But Fino has been in the model of building up businesses for the rural India for this segment of customers for the last 15, 16 years. we continue to bring new products, and you would see new LOBs coming up in the next 6 months to 12 months as we go forward.
Okay, and Rishi, lastly, I just want to understand how should one look at your net profit ratio? It's gone up from 5% to 6% YOY. How quickly do you think this is going to trend higher, and where should one see it in FY25 then?
So if I look at YOY basis, we have grown at 25% for 9 months. And against that, our expenses, total expenses have grown at 12% or so. So roughly 50% of the growth which comes on the revenue comes to the bottom line on the net profit side. So we expect that this number will continue to be in the same range, and we should see healthy growth because of the operating leverage, the way we have built up the asset light model, and also the fact that we are pushing a lot on the digital side. Let me just share, nearly 36% of our savings account customers have a digital linkages with also with us. So we are seeing an increase in the debit card spends. We are also seeing a substantial increase in the UPI. In fact, P2M UPI has seen a 55, constitutes now 55% of our overall UPI transactions, and they are roughly about 135% growth we have seen in the last 9 months. So substantially, if I look at both that the customer ownership is gaining strength, we're also making inroads into digital businesses. We believe this model of which we call TAM, transaction, accounts, and monetization, is actually building up the entire business for Fino as we go forward in the next couple of years.
Thank you so much, Rishi, for joining in with us on ET Now today and giving us your insights on the company as well. Thank you so much. But Ashish, thank you so much for waiting with us for such a long time. And Ashish, very good morning to you. I'm going to ask you, the question that is on everyone's mind and always is on everyone's mind is that given this volatility, how should one protect themselves, especially now, there's a bit of a fear in everyone's mind as well. So what should an investor actually do to protect themselves from this volatility, Ashish?
Yes, I think this Adani fiasco has taught us a lesson that ultimately, the price earning ratios are also very important. It's not just the market cap or the momentum in the market which lure a lot of traders, and in no point of time they become investor in such stocks. So when you are buying a business which is or discounting 100 years forward or 150 years forward, there's going to happen. So my humble advice and suggestion will be that until unless there's a clear visibility of that much growth in a company, fundamentally, we should not bet now unnecessary for the sake of just trading, because in no time you will come from trader to investor. So invest in fundamentally good companies, and the way market is behaving right now, I think instead of small cap and mid cap, our focus should be on Nifty 50 stocks, which are, and particularly in those segment also, stocks which are having lower beta. So your FMCG, your automobile, etc., or IT, I think sector should be pick and choose in from those sectors. And high beta stock should be avoided at this point of time.
Okay, Ashish, thank you so much for that. On that note, we're going to slip into a short break. But after this break, we will be taking your stock-related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. And we have our experts today, Kunal Bothra as well as Ashish Maheshwari, both of them joining on the show. And yes, we are having a very truncated query segment. So quickly, I would request both the experts to keep their answer very crisp and brief, but do mention all the important points that our viewers are asking about. Let me take the first query coming in from Santi. And Clean Science is a counter that is asking his query on 33 shares at a price of 1,555 rupees per share. He's saying that the stock has posted excellent Q3 results and the stock has come back to the bullish price action. He wants to know what sort of a target that he should aim in order to sell the stock and then re-enter again, Kunal.
So in fact, I remember I think a week back, similar query was given, and I mentioned they need to hold the stock as well as look to average because the indicators were oversold. We've seen a very good bounce from sub 1400 levels to now 1525. I think it's a good time where you should look to probably square off most of your positions over here. Maybe another 10, 15, 20 rupees higher. That could be a best case scenario for the stock over the near term. But I believe a second retest sub the 1400 level should be a good entry point back again for Clean Life.
Ashish, this next query we have is coming in on Poonawalla FinCorp. This is from Mahalakshmi from Hyderabad. Wants to know, they're currently holding 400 shares of Poonawalla FinCorp at 260 rupees. Should they look to add around 600 more shares at the current level, or they should look at buying Bajaj Finance then? Ashish, mute.
Sorry. So in my view, Poonawalla FinCorp remains my pick number one. If you ask me about the NBFC pack, because the kind of numbers they have reported and their aim to triple their book in next 3 years, this is a better bet. But in my view, market is slightly weak, so you should buy this stock at 260 to 70 levels. Wait for some time before fresh entry.
Hemanta Datta has Anant Raj 110 shares at a price of 118 rupees per share. He wants to know whether he should exit average for the medium to long term. What's your take on this one, Kunal?
Well, I would not suggest an averaging as of now. So I think it's a stock which had done reasonably well. From 100, the stock went to almost 120 plus levels in a very short span of time. The only concern with is the timing of averaging with respect to the overall market conditions. Because the market conditions are a bit more wobbly and volatile at current levels, I would believe that wait out for a phase where this volatility subsides. That could be a point where you may look to average. So even if it's a few percentage points lower from current levels or even higher, that could be a classic point to average the stock, not at current zone.
Ashish, this next query is coming in on Reliance. This is from Ankit Shah. Wants to know, he's bought Reliance at 2,550 rupees. What should they be doing?
See, we have seen continuous sell-off in Reliance also, and this on account of institutional liquidating some of positions there. But fundamentally, nothing wrong with the company. Only thing is the market sentiments are not that good. That is why the stock has come down. So I'll advise to remain invested at this price point and let dust settle. Then maybe you can average also, so that your cost of acquisition will come down. But remain invested. No hurry to book losses.
Right, this one is coming from Madhuri and Kunal. Madhuri has mentioned that she's currently in a loss of around 20% in Polyplex as well as CDSL. She's not given the buy price or even the quantity that she's purchased, but she's asking whether she should continue to hold average, and if average, then she's asking at what sort of a price.
So Polyplex, I think you can just look to hold on. My sense is that I think I've mentioned this before as well, that the stock is going through a pause over here. The indicators are coming into an oversold territory. Yes, the prices have not rebounded, but then that's what happens when the stock gets into a correction as well as a consolidation. So I believe whenever the recovery happens for Polyplex, the stock should scale past about the 1700, 1750 mark in a very short span of time. So you should look to hold on to the stock, not average at current levels. CDSL, I think the stock has not yet entered into an oversold territory. So maybe another 10 to 15% lower from current levels is where I believe that the stock may enter into an oversold territory. That could be a point where you may look to average.
Ashish, this next query is coming in on Dixon Tech. Alok has Dixon Tech at around 4,845 rupees. Should they continue to hold or sell this one then?
See, you are incurring a very big loss, so I'll not advise to exit at this price point. In fact, you should, if you can manage some more funds, you should try to average the share, because last quarter was just an aberration quarter where their top line dips very significantly, and there was direction bottom line also. So a stock was punished. And along with FIs, we have seen continuously selling this stock, but fundamentally nothing wrong with the company, and I think in next 2 quarters it will bounce back on account of good demand for uh, their products or mobile phones, etc. So my suggestion will be to average this stock at this price point and hold for at least 6 months. Then you will get median of both your purchase price and today's purchase price.
Right. The next one is coming in from Satya, and this one is also for you, actually, Ashish. He wants a fundamental advice on switching from HDFC Life to ICICI Prudential, as the exposure to a high levels premium is just 5%. He is saying he is not interested in SBI Life, but what's your view? Does it make sense to take the switch from HDFC Life to ICICI Pru? He's anyways knocked out SBI Life from that list. Do you think anything else fits the bill?
I think only LIC is the again stock, and Max Financial maybe another pick. But I'm okay with his decision and from HDFC Life, which is a laggard and not a rewarded investor for quite some time. True ICICI is better bet.
Kunal, this next query is on Bombay Burma Trading Company, and the viewer wants to know they have 250 shares of Bombay Burma at 958 rupees. From a short-term view, what should they be doing?
See, frankly, it's a very low liquid and rather an illiquid stock. Average trading volumes are just paltry thousands for the stock price. So you have to, be very, very wary of such kind of counters, and especially in the market scenario like this. Now, since your average buy price is around 950 levels, the stock is at 925 approximately. I think yesterday or day before the stock had seen a good recovery, good price volume candle for itself. But then I would suggest that if it gets closer to your cost price, say closer to 950, 960 levels over the next couple of days, where there is a high probability, that's a good time where you could look to exit.
Okay, the next one is coming in from Robert, and he has 320 shares of Power Grid InvIT at an average price of 128.08 per share. He's investing for the long time, and he's heard about the tax on REITs and InvIT dividends. He wants to know whether he should continue to accumulate some more or look to exit this particular counter. What's your take on this one, Ashish? Power Grid InvIT is the counter.
Yes, I think you can continue to remain invested here. First of all, the volatility is quite less in Power Grid InvIT as such, and there's a decent correction which has already taken place in last 3 months and more in last 1 month. But fundamentally, nothing wrong. It's just a correction because of market only. And my advice will be to remain invested here.
Kunal, this next query we have is coming in on Dabur. This is from Venkat Ramani from Bangalore. Now they have 480 shares of Dabur at a price of 592 rupees per share. Want to know whether it's the right time to average this or add, sell. What should they be looking to do? 1 year time period is the horizon.
So I would suggest to wait out for some more time. Today is the day where the stock has reacted. I think, if I'm not wrong, post the results, the volumes are also pretty much high. The selling intensity has managed to a breakdown of a 2 month, 3 month low for Dabur in terms of stock prices, and that generally would probably have an effect or ramification to the stock over the next 1 or 2 weeks. So possibly another 5% down from current levels is where you can look to average. That could be closer to 500 or slightly below the 500 mark.
Okay, this one is coming in from Dhananjay, and he wants to know best FMCG stock for growth between Marico, Dabur and Tata Consumer for the period of 3 to 5 years. And what's your pick on among these three, Ashish?
I think Dabur is a better bet, but if you give me some liberty, then I'll place my bet on Britannia. There's a company just firing all the engines, and the kind of numbers we have witnessed in the last quarter, in quarter to quarter, that the net profit has almost grown by 60, 70 odd percent, which is a miracle for a FMCG company. So if you are really long-term investor, I think place your bet on Britannia. Otherwise, Dabur on the lower price.
Kunal, this next query we have is coming in on PFC, and this one is from Ravi from Vijayawada. They have PFC at 140 rupees per share. What is the short-term, medium-term outlook and levels that you're keeping for?
See, I think you should hold on to the stock as of now. I understand that even this stock has corrected from 160 to now sub 140 levels, but the volatility of the stock is far less. The beta nature of the stock is significantly low historically, and I think that could probably play to the positive part for the stock in this volatile time in the market. So, if 130 odd levels, hold on to the stock, which we've seen in the last 1 week, the stock has been holding on to those support levels. There is a high probability that the stock may get into a steady bounce as well as a rally for itself.
Okay, this one is coming from Prashant, and he's saying, my question is to Kunal ji, and he wants to know whether he can buy Blue Dart at the current price for the long term.
Well, I would suggest not to buy the stock at current levels. It's falling very sharply in the last 1 month. I think from 8,000 levels, the stock has corrected to 6,000 quite swiftly. The volumes have inched up higher. No signs of indicators which have come back into an oversold territory, and even if they've come back into an oversold territory into an early time frame, the selling has just increased and intensified, which means that there could be further correction in line for the stock. I would suggest to stay away from the stock as of now.
Ashish, this next query we have is coming in on Jubilant Pharmova. This one is from Guru, and they have Jubilant Pharmova at 480 rupees per share. What is the fundamental view on this, and should they be looking at to average this stock at some point?
See, this is a stock which has really underperformed and not going anywhere. If you say Jubilant Pharmova stock, so my suggestion will be to exit from this stock, and if you want to remain even same space, I'll suggest that you buy Sun Pharma or Cipla, which can give you better returns. But I'm not very optimistic on this stock.
Okay, this one is coming from Muni Raju. He's writing to us from Chennai. And this one is for you, Kunal. He wants to know whether it's right time to enter Sundaram Finance. I believe he already has some shares at 85 rupees per share.
Again, it's a very illiquid kind of a stock, trading at 2,300 plus levels. It's trading above the longer term averages. 50 DMA also, I think, has been the stock is just holding around the 50 DMA. But then, the only concern is illiquid, nature of the stock price. That's one of the reasons why I would not suggest to average more or buy at current levels as well.
Okay, Ashish, this next query is coming in on Kiri Industries. This is from Nageshwar from Hyderabad. Now, what they're saying is they hold Kiri Industries and they've seen a sharp fall coming in the last month or more than a month, and almost halved in terms of the pricing. Could you tell them what has actually happened in this stock? They need your view in terms of investments, and mainly what should they be doing now if they're holding this stock?
I think you need to exit from this stock from 560 odd levels. The stock is continuously going down, and this on account of the losses that company is incurring for last 2 quarters, and December also won't be an exception. So my suggestion will be to exit from this particular counter.
It's coming from Soumitra and he wants a fundamental view on Relaxo. As far as I remember earlier on, also he had mentioned that he is having some holding in Relaxo. So what's your take on this one, Ashish? If he's already invested in it, should he continue to stay put with Relaxo or look at some other avenues altogether?
So Relaxo is one of the again most underperformer stock in footwear space. The stock is already at 52-week low, and I'm not expecting any bounce back in performance per se. So my suggestion will be, if you want to remain in the same sector, Metro Brands will be a better stock where you can bet because of continuously they are coming out with good set of numbers, and the kind of reach and portfolio Metro Brand has built up over a period of time. I think this will give you better returns instead of Relaxo.
Kunal, the next query I have is coming in from Bharat, and this one is on two stocks. One is Devyani, they're holding Devyani at 175 rupees per share, and the other one is ITD Cementation, they're holding it at 130 rupees per share. What's your view for 3 to 12 months on these two stocks? What should they be doing?
So Devyani, I think we should continue to hold on. I think 170 odd levels is where I believe that the stock had very strong support. Of course, it's fallen 8-10% from those levels because of the way the market conditions have been. But I think the stock can make a comeback towards that 170 mark, possibly in the next 1 to 3 months. So there could be a higher likelihood that the stock may get into a recovery phase once the market stabilizes. Even ITD Cementation, the stock is nearing the 50-day moving, the 200-day moving average at current levels of 100 odd levels. So I would believe that possibly in the next 1 week, if the selling abates for the stock and the stock holds on to its 200 DMA, there is a higher likelihood that ITD Cementation as well can get into a bounce to at least 115, 120 mark.
All right, and with that, we actually run out of time for our query segment. Thank you so much, Kunal, as well as Ashish, for joining us on the show and taking our viewers through all of their stock queries. I know, viewers, this was a very limited time to take the queries, but yes, earnings season, and we have a management joining us right after the short break, so don't go anywhere.